This is Anthony Woods with International Futures Group in Chicago, a division of EFG Group, with today's market review. Today's date is July the 14th. Market, first off, the dollar index softer on the day, down 20. Energies were rather mixed. Crude up, nat gas showed strength early but started to sell off. People are talking about warmer weather coming into the mix for the nat gas. To me, it doesn't seem to be extreme. There is a seasonal to sell nat gas on July the 18th. I kind of like selling September nat gas somewhere up around the 2090 level up to the 2095 level. It's supposed to hold it for a few weeks, but I think nat gas is probably a sell up around above the 290 level. But I'd like to spend a little more time on the softs today. Cotton found some strength today, up over 60 today. I still think the fundamentals just can't follow through to the upside. Settle somewhere around the 66.20 level. Ideally, I think it settles somewhere around 67. I really don't think it's going there, but I like being short cotton. I just think with China selling its reserves, I think some of the buying you've seen in the last 2 days seem to be more technical in nature. They couldn't seem to break that 65 level, but I still think that level will be taken out. So I like being short the cotton market. If you pay attention here, cocoa is a market that I've been bullish on for quite a while. I was buying down close to around the 27 level. Still have some people long cocoa. Cocoa up over 60 today. Supplies still look tight. I kind of thought I could take a run to 35. I don't know, might have to adjust that a little bit higher. But if you can get a decent break in the cocoa, at this price you'd have to get a decent break for me to want to be interested in entering that market on a new position. Coffee is another market that interests me. I've kind of been back and forth on coffee. The reason, the fundamentals. Several months ago they come out and they say Brazil has 40 million bags of coffee. They come out a few weeks later and say Brazil has 50 million bags. These are private forecasters. The USDA came out and said over 52 million bags, which people thought was kind of out of the norm. But I don't know how much the fundamentals will let coffee go to the upside, but it did pump out a buy signal yesterday. Technicals look a lot better. I'm looking at September coffee, seems to be more sideways. I think you sell it somewhere up around 135 to 137. Me personally, I'd rather buy the break somewhere down around the 128, 127 level, which is about a 400 or 500 point break. But from a technical aspect, coffee looks good. The fundamentals, depending upon the private forecasters, are kind of all over the place for coffee. Another market I'm looking at is sugar. I looked at it last week. It just seems to be the market was extremely short. Kind of, I could compare it to maybe soybeans or corn a few weeks ago. Market seemed to be extremely short. And some of the fundamentals look to be changing. We still have a big supply of sugar, but they're talking about that supply could significantly dwindle going into next year. So it seems to me the most amount of sugar we're going to have is possibly today going into next year. So is the pile getting bigger or smaller? We like to ask ourselves. It looks like in sugar the pile is going to get smaller. To me, that leads me to believe sugar could have a significant upside. The reason I kind of compared it to corn and beans is the number of people who were short that market. As far as the meats, they were mixed today. Grains were also mixed today. Beans down 3 cents, corn down 13 cents, wheat down slightly. I like selling September wheat. We probably have to rally 15 to 20 cents up to that 586 to 592 level. But one thing that I did do today in the wheat market, I bought Kansas City and sold Chicago. The reason being I did it at 4 cents, which means Kansas City wheat was 4 cents over Chicago. I was trying to wait for it to go back to zero, even money, which I've been waiting for a few weeks. So I kind of jumped on it today. The reason being Kansas City wheat's a higher protein wheat, which normally will always have a higher price than Chicago wheat. When those two prices start to merge, I consider that something out of the ordinary. I think it's a low risk trade. We haven't had good demand for Kansas City wheat, but something closer to normal is Kansas City 30 to maybe 50 cents over the Chicago market. And I think normal will come back into play here fairly soon. That is today's market review. Thank you for paying attention.